Yo, what's up, guys? In today's video, we're going to be going over how I scan my stocks, basically going over technical analysis, marking out these breakouts, and how to really look for a true 5-star A+ setup. Now, the scanning process is very important because this is how you're going to find the stocks that are ready to break out. It's very, very important. You don't want to just pick random stocks in the market that don't even move, right? It's very important to pick stocks that are actually going higher or actually are setting up in tight bases, wedges, or flags that actually can see a big move. It's very important to look at these good stocks because if you're trading bad stocks, you can get caught up in choppy price action, and you just don't want to be trading in a swing trading market with bad stocks. It just doesn't make sense, right? You want to make sure that you're picking the right stocks, and this is how you're going to set up your scanner. So, number one, this is my scanner that helps me find breakouts. This scanner filters out all of the noise. Like I said, it shows me stocks that have really good swing potential. I'm not just trying to catch random plays. I want stocks that are moving super, super clean, trending strong, or might make a tight range, base, flag, for that breakout. So number one with the scanner, this is how you go to the scanner, right? So you have trading view over here. You're going to go to this little dartboard that it looks like in the bottom right corner. My face cam's actually covering it. Let me move it really quick. It's going to be this one right here. See this? So you're going to click that. The scanner is going to pop up. Now that you see how to get to the scanner, this is going to be your scanner. It's no fancy scanner. It's just the scanner on TradingView. Now, you can screenshot this if you would like, or you can just listen to me read it off and explain it. So, for number one, the price is going to be over 3. I don't touch any penny stocks or illiquid names. I don't touch stocks that barely move and that just IPO'd or basically just touched in the stock market, touched down in the stock market. It's very important to trade good stocks, and especially they need to be over $3 just so yes, it's a low cap stock, but it's not too low cap to the point where it has, you know what I mean, no liquidity in it. So you want to trade stocks that obviously are liquid and people are buying. So make sure that the price is over 3, right? That's the very first thing that you're going to do is put the price over 3. The next one is the change. It has to be 0.01. I want stocks that are actually moving. If it's green on the day, it might be setting up or already breaking out. You don't want to look at stocks that are super red on the day. Usually it's going to show you bad setups, right? So when you go to the change, you can see right here, change over 0.01. The next criteria is the market cap. It has to be over 2 billion. I usually stick with mid caps to large cap names. They do follow better levels. They give smoother, you know what I mean, options plays instead of those super low cap illiquid stocks. It's very important to trade stocks that are liquid, so it has to be over 2 billion, right? That's going to be the next one, market cap over 2 billion. Now, the fourth one is going to be the moving averages. You guys already know that we had the moving averages on our actual chart. These moving averages are going to be slightly different. This criteria is mainly based off of Mark Minervini's scanner, some of Qualimagi's, and some other inspirations that I did have. So I use the 8, the 21, and the 50. I use these to see if the stock is in a strong trend, and if the price is above these, that means for one, it's in an uptrend, it's bullish, and when they're stacked below the price, that means that, like I said, price is super bullish. So you want to make sure that all of the moving averages are under price. Yep, under. So EMA 50 has to be under price. EMA 21, under price. EMA 8, under price. Super simple. You can go in here and mess with it yourself. Obviously, it's going to be super easy. You see everything on my scanner. Now, the next thing is the ADR, right? You guys know what ADR means. It's the average daily range. It's how stocks are actually moving on an average daily basis. You don't want to move stocks that barely move, right? That move on a 1, 2, maybe even 3%, right? We're usually looking for 3% and above. So the ADR has to be above 3%. I only want names that move. If it does not move at least 3% daily, it's just not worth my time. I'm not going to be sitting in a stock that moves 1%, and it doesn't make sense, especially in a bullish market. If we are, let's say, in a bear market or a consolidation market where the swings are not playing as well, you can take these lower ADR setups and maybe short swing trade them, like with a weekly expiration, or you can even day trade those breakouts. But in a swing market, which when we're super bullish, obviously you're going to be trading these stocks that are above 3%. So you can see the ADR is going to be above 3%. Now, the last one is just average volume, right? You want to make sure that the average volume is over 500K. I need liquidity. Less than 500K, you're dealing with bad spreads, choppy price action, and more volume means that it's going to be cleaner moves. If people are not buying the stock, if there's no liquidity in a stock, no volume, the stock's not going to move. The options are not going to move. So it's very important to see the average volume over 500K. That's the scanner, right? Now, when you see this criteria, all of these stocks that are inside of the scanner meet the criteria. So what you're going to do is you're going to scan for your stocks. This is how I find, I'd say, a good 80% of the stocks that I trade. They're usually in my scanner. The other stocks are just built on like my huge watch list that I just kind of go over and scan through, or I find some good stocks from portfolio managers on Twitter. But besides that, most of them come from my scanner. And you can see when we click these and go to a daily time frame, you can see some stocks set up good, some stocks are mid, right? Now, you want to identify a good stock from a bad stock. Now, let's get into the actual charts and scan for some stocks. I'm going to go over stocks that look pretty good and then stocks that do not look that good. So, number one, Hood. Is this something that we would take? This is on the scanner, by the way. It meets the criteria, but is this something that we would take? Not really, because it didn't make like a big move up and then get tight. You see how it's just kind of trending up? This is a stock I'd stay away from. Let's go to NBIS. Is this a stock that I would take all the way up here? No, it wouldn't even make sense. Now, if we go in replay mode, would I have taken it right here? Absolutely. You can obviously see big gap up on the stock from news, higher lows, lower highs, starting to consolidate. Bang. That's what we're looking for. And you can see it obviously played out. But obviously, up here, not a good trade. Let's actually find one that looks decently well now. You can see it takes some time as well. So like AAP, this has a 3.5% ADR, and you can see, you know what I mean? We've actually had some decent momentum on this stock in July of 2025. You could see the stock gapped up off of earnings, pulled back to the moving averages, broke out, started going up pretty nice, you know what I mean? Pulled back again, starting to consolidate, you know what I mean? Got above the moving averages, pulled back, and now it's getting really tight, floating right on the moving averages. So I like to basically say what Qualamaggie says. They're floating, they're surfing on the moving averages. You can see that we have 1, 2, 3, 4 days where this stock has been going sideways. So you can see AAP has a 3% ADR. You can see down here, the volume is decreasing. What we're looking for on a stock like this is, you can obviously see we drew the trend lines. By the way, you know what I mean? You're using wicks. You're not using like bodies of the candlesticks. You're going to basically look at this wick, and then you can see these wicks up here. So nice wedge right here. You can see if we see the pop above this, we would get right above the moving averages, targeting this high and these highs up here, right? So we would look for something like this. We want the stock to break out and to keep going higher and higher. And obviously we would take it off of our entry criteria, which you guys already know of. We would look at something like this. Look at it on a 5-minute time frame, how we're pretty tight. We would take it if it's consolidated and then boom, broke. We would take it right here. Stop loss goes to low of day. And then obviously you would swing it, set your targets at other highs, previous rejections, and that is how you're going to go about that. So super simple. You can identify these good setups from bad setups. Look how tight this is. You know what I mean? 3.5% ADR. It looks like on the weekly we've been gaining some momentum from these lows down here, and it looks like it could go higher. So I think that's a pretty decent stock to look at. Now, let's go on a stock like, you know what I mean? Like this stock. You know what I mean? You can see that this stock, PII, has been on a downtrend for a while now. You know what I mean? Yeah, it's picking up a little bit, but like, does this look like the best setup? It's not bad, but it doesn't really look the best. You know what I mean? It's not something that I would probably take. For one, because it does have a 3% ADR, which is not the worst. Usually I'm looking for like 4 to 7% ADR. That's like that perfect ADR, in my opinion. I think like that 4% to even 10% ADR, amazing. You know what I mean? 3% ADRs I like taking, but the technical analysis almost has to be perfect, right? You can see this isn't like the best setup. Also, it doesn't look like right here followed through pretty nice. But other than that, right, if we go to a monthly time frame, we are on an all-time like downtrend from back here. Like we've been downtrending for a while now. Plus, we're below the moving averages. Plus, you can obviously see, I'm guessing we are below. Actually, no, we just got back above the 200. But this is just a stock that doesn't really look the best, right? Now let's keep scanning. It's very important to keep scanning. IREN, this is a really, really good stock. Look at the momentum. Absolutely ripping. But it's too high. Why would we take a breakout if it's already all the way up here? We would have taken it down here after it made the big move, pulled back, got tight, bang. That's your breakout, or even this breakout up here. Other than that, too high, not enough consolidation, not really what I want to see, right? We can keep scanning and scanning. It takes time also. One thing that I want to teach you guys is when you are scanning, it's not like some crazy fast process. It takes some work. Like, you have to understand that. Okay, let's look at this stock, Ford. You can see this has a 21% ADR. Also looks like it's been picking up with momentum, right? Huge move up on this stock, pulled back to the moving averages, building some nice resistance. This is a stock that I would take, right? This actually looks pretty good. You can see building a nice wedge right there. I think this looks pretty clean, especially on the weekly. You know what I mean? We gapped up. We're going sideways. You can see this looks pretty clean. You know what I mean? 21% ADR too. So if we broke out of this, we could easily start trending up to this high and continue on the stock. I think this is a pretty good stock. I actually like this. And you can see the difference between stocks that are already too high and then stocks that are tightening up and pulling back. I think it's very important for you to realize the difference between the two. Another stock that's on the scanner but way too high. Is this a stock that you would take, guys? No, man. It broke out all the way down here. You would not want to take this all the way up there. It wouldn't even make sense. If anything, I'm taking puts all the way up there. You know what I mean? So it's very important to realize, like, same thing with QBTS that's on the scanner, way too high up. You know what I mean? They're both in the quantum computing sector, so I don't think that's something that I would take. Now, you can also see names like this. I want to go over good setups, bad setups, mediocre setups, terrible setups, right? So let's look at NOG. You can see the stock just overall does not look good, like at all. It doesn't have momentum. You can see it crashed right here, kind of consolidating. Like, this is just a stock that I would not want to take, right? Yes, it has some nice resistance, but for one, it has a 3% ADR. For two, it's below the 200-day moving average. It's not in a down or an uptrend. It's in a downtrend and it's a shitty stock overall. So this is something that you would want to stay away from, right? You want to make sure that you're looking at the stocks that truly are having momentum, right? It really plays a big part in your trading. And it takes a long time, right? So let's give an example on WBD. This is actually a pretty good name. You know what I mean? It's not the cleanest setup, but you can see, you know what I mean? We make a huge move up on the stock, right? Make a higher low, lower high, creating a base right here. Bang. Today could have been a good breakout. Now, you might have been sketched out by this wick right here, but still, the main base is right here. So I would have taken that once we got above that. I think that's a pretty clean setup. And then, yeah, you can see there's not too many setups. This week hasn't been the best week, especially for examples like this. But you can see, you know what I mean? Sometimes there's going to be good setups. Sometimes there's going to be bad. You could see this setup right here. This setup overall, you know what I mean, doesn't look insanely bad. We've been kind of getting some momentum right here, you know what I mean, above the 200, playing out with some nice resistance. This is a setup that's pretty good. Also, it has almost a 5% ADR, building some nice resistance, building nice support right here. If we could blast through this previous day high, I think that the stock could reach this high and continue higher. So hopefully you guys are getting it now to the point where, you know what I mean, good stocks from bad stocks. And now, since you got the scanning process, you know exactly what we do, I want to go over kind of what I do after I scan, right? So what I do after I scan from the list that I mark out, right? So like I'll scan for an hour long throughout the whole entire thing, and I'll pick like 10 stocks, let's say. From those 10 stocks, you know what I mean, I'm usually looking for the tightest ranges, the tightest base setups, or the tightest flags that have met my criteria, right? They need to meet the whole criteria. They need to be most likely above the 200. They need to be above the moving averages. They need to at least try to look like they're getting above the moving averages. Like if they are consolidating on the moving averages, and mind you, we're always using the daily time frame, that you want to make sure that we're above the key moving averages, because if we're not, we're in a downtrend, and you don't want to take a breakout when we're in a downtrend. It just doesn't make sense, especially to swing. So also, what else do I look for? I look for volume to dry up before the potential breakout. So usually what you see is after a big move or after any move, you want to see volume start to dry out and get tight, right? Because that next burst, when institutions are buying, you want to make sure volume dried out. You don't want to take a stock that just rips and rips and rips. We just went over that. So it's very important to see volume dry out before that potential breakout. And then the third thing, when I do put, let's say, 10 to 15 stocks on my watch list from the scanner, I like to dumb it down, right? I like to, you know what I mean, pick the best of the best, because one of my worst things that I used to do in my trading that held me back was I was trying to get in every position. So if you have 7 trades that are breaking out, you obviously don't want to take all 7 of those trades, right? It wouldn't make sense. You would probably be oversizing. And also what that can do is if you see a ton of breakouts at what time, you'll get in your head. You're not going to know what breakout to take. You're not going to really know which one's the best, to be honest, because you're going to make up scenarios in your head. And then also your mindset's going to be a little sporadic, right? You're going to try to take this and then think this is better, and you're not going to know what to take. So I think it's very, very important to dumb down your watch list and keep maybe like 3 to 5 stocks on that watch list. You know what I mean? Maybe a couple more that you can watch out for, but like on your focus list is what I like to call it, the ones you're super focused on in that day. Keep it super low. You don't want to be looking at a crap ton of stocks, especially when the market is hot, because a lot of stuff is going to break out, but that doesn't mean that everything is the best opportunity. The best opportunity is in the best stock that meets your criteria. So dumb it down to the best stocks. That's how you're going to be able to make money, right? Those become my A+ setups in my watch list. Why does that matter, right? Scanning is where the edge even starts. You're not going to really be able to just go look at random stocks and hope for it to break out. The scanner is literally meant for scanning. It's meant for these breakouts. It has the criteria for, you know what I mean, a reason. It is literally a breakout scanner. So it scans for the stocks that are having momentum, have good stocks, good volume, you know what I mean, have a good ADR. So that whole criteria, that's where the edge first starts. That's where you're finding those stocks in the first place to swing. And I think it's very important to, you know what I mean, make sure you're scanning every night, make sure that you're going over the stocks that you take, or even if you didn't take something and it worked out or it failed, study it. You know what I mean? Put it in your data center and just, that's how you build data on a strategy to understand what works and what doesn't work over time. So without the right stocks, you can't get the right setups that are actually going to move. And the prep that you do before your actual trading day, that's what's going to build that confidence when the breakout is actually in play, right? So I think that's very important. And I think, you know what I mean, that's what you should be focusing on. So besides all that, I really hope you guys understood all of that. Now, I want to go into some stocks that I personally took with my own capital. I trade this with my Discord. I have a premium Discord that I trade with every single day. I go live and I take these setups and I alert it to them, right? So these are setups that I've put my own money into that I want to go over. Now, the first one is going to be United Health Group. You can see overall, this is in a downtrend, yes, but was it a good stock, right? Super, super good stock. It had some really bad news, and that's exactly why the stock blemished. But you can see it pulled back to a huge support level down here on the monthly time frame, right? So if we just look at a weekly, it looks like the weekly's been, you know what I mean, looking pretty good, regaining some momentum, got back above the moving averages, looking pretty smooth. Also, same thing with the daily, right? Daily looking good, gapping up, getting some momentum. The only thing that I didn't like with this trade is that we were below the 200. So you can see we're below the 200. We're still in an all-time downtrend. But this, you know what I mean, met my criteria so much besides that to the point where I was like, okay, I still really like this stock and I'm going to take it because I think it's still very undervalued. So you can see on United Health Group, we gapped up right here, moved sideways, broke out again. From these lows all the way down here, you could see that this stock made an upside move of about 54%. So after making a 54% move from all the way down here, what did it do? Started pulling back, right? Held the 10-day moving averages. We're surfing off the moving average, getting really tight. You can see we have a lot of consolidation right here. And then on this day, right here, this is where we broke out. You can even see on like a 30-minute time frame, see how we made a big move up, pulled back, we started breaking out. Oops. Right. Why is this not deleting? There we go. See how we broke out right there? So beautiful breakout. I took it on this day. You can see broke out. Let me fix my trend line. And you can see absolutely rallied. Even today, started trying to go higher, pulled back. Really good close overall. So I'm still currently in this. It's looking really good. And I'm targeting these highs up here, right? So these are going to be the highs that I'm going to target. And yeah, I think we still have a long way to go. I actually have like a month out to 2 months out on these contracts, I'm pretty sure. So this is looking amazing. You know what I mean? You can see big upside move, pulled back, got tight, broke out. Guys, this strategy is the most simplest strategy. It's not some ICT complicated concepts or any back and forth guesswork. It's very, very simple. Now, that doesn't make it easy. It'll feel easy if you start winning trades, but these can become hard. You can see a lot of false breakouts. So you want to make sure that you're looking for volume above your level. You could see on United Health Group what happened in the very morning, right? Morning open, 9:30. Look at all the volume that we got, right? You can see that, like right here, we got a lot of volume. We closed pretty high. Like that was real good volume. I added on that and it paid off very well. You know what I mean? I'm up a decent amount. I think only $1,000 on this so far, but we could easily be up, you know what I mean, 5 to 10K within this level if we do continue higher. And now obviously my stop loss will be at break even or negative 20% or around low of day. Basically, if we just start to lose momentum and we start dipping down, I'd stop out if it pulls back and invalidates my breakout. So hopefully you understand this trade. Now I want to go into ASTS, right? You can see on this stock, pretty good stock at all-time highs for a reason, absolutely ripping. It has a 7% ADR. You can see if we look at these highs all the way up here and draw this trend line, look at this resistance right there, right? You can see we have a lot of resistance, Also, if we look before this candlestick, we were below the moving averages. If we're below the moving averages, you want to make sure that you're not taking this trade. That's why I didn't take it down here. There was no reason for me to. Did break out right there, but we just got above the moving averages and I missed it. But then I realized, okay, we're actually coming right into this trend line. We just got above the moving averages, got a lot of volume. Let's look for this next day and let's look for the breakout. So if we go into this day, which was where the breakout actually happened, you can see market opens and we start to move up. This is where I took it right here, stop loss at low of day. And you can see the rest is history. I go to the 30-minute time frame, absolutely ripped. And the next day, bang, went even higher, straight rocket ship this day. And now you can see this is where we're closed at. Currently, I'm still in the stock, made over $5,000 on this trade. This was a beautiful, beautiful setup. And you can see it just looks even better to go higher, right? Like it looks so good. It pulled back today, could pull back tomorrow, but within the next week, I think this stock can easily start ripping to these highs where I'm targeting at about $60. So you can see, right? We make a huge move up on the stock, right? Huge move up, 170% move. And then we pull back for a long time. We actually came up to this resistance with a lot of volume and broke through it. Lots of volume. Even look at the weekly breakout. Like, tell me that doesn't look like a beautiful weekly breakout. Absolutely amazing. Beautiful setup. Made me a lot of money. So very important to realize that trade. The next trade we're going to go and look at, because I want them to be pretty, actually we'll go over NVTS because this was a pretty weird close. So I want to show you guys how you're going to take setups that break out in the pre-market like this and then pull back and how you're going to take it off of the pullback. So you can see we broke out in pre-market and we started dumping as soon as the day started, but we pulled back right to breakout level. Remember, our white line is our breakout level on this. If we look at this on a daily time frame, see how we had this nice resistance. We got above the moving averages with a lot of volume. Next day, bang, breakout. But we're lacking volume, right? You can see we are lacking volume on this day. So what am I going to wait for? I'm going to wait for the moving averages to be below price. That's when I'm taking it. You can see the moving averages are above price. I want to see this candlestick above 5-minute moving averages. See, bang, we get some momentum. That's where you can enter off of the close or a pullback. Anywhere works. Stop loss at low of day, right? Because realistically, if we look at a daily time frame, we are above the breakout level, right? You can obviously see that we're above it. We just needed momentum, and we started to actually reclaim the moving averages and get above them. You can see trade started working out right in our favor and ended up moving up the whole entire day. And this is what the daily time frame looked like, right? If we look on a daily and just go in replay mode, you can see those next 2 days ripped. You know what I mean? Look at this on a 4-hour time frame. It broke out, pulled back, we got that nice entry, and kept going higher and higher and higher. Now, it wasn't the most, you know what I mean, insane breakout. Like, it didn't go straight up. It started pulling back and chopping a little bit, but it was going up pretty frequently, and you know what I mean? It actually looked pretty smooth. And now, I'm still in this stock, but I'm looking to stop out within, you know what I mean, the next couple of days or even tomorrow if we do break below these moving averages. So you can see, you know what I mean, we broke out down here, got the entry, but we're kind of just chopping and we're losing a lot of momentum, which isn't a good thing. So we want to see it obviously start to get above these highs and to go higher, but if we can't do that, then I will stop out once we break below the moving averages. So besides that, that's really how I scan for my stocks. I hope you guys enjoyed this video. I want you to join my free Discord. It's completely free. Obviously, I do have my private Discord where I trade live in and I go over my trades. I alert my trades. I do daily classes. But besides that, just join the free version for now. Keep learning. Join the Discord. Look at all of the education in there. There's books. There's podcasts. You can even see, if we just show you right here, you can start right in my Discord for completely free, right? If we look at this, this is the free Discord. You join up. Obviously, you don't get all the crazy sections down there because that's for my premium. But you do get all of this where you can see my announcements every day. You get a whole entire, you know what I mean, shit that I wrote up and a video that I made. Also, I sent a good options video in there. Trade recaps. I always post trade recaps in here, right? You have a free chat to see everyone chat. You also get a bunch of books and podcasts. You get education. So make sure to join up on my free Discord if you're not already in there. Get started, start educating, and just keep eyeing down these setups. You know how to look for setups. You have the scanner now. Now it's time to start journaling, identifying these setups, and build a database for yourself. I hope you guys enjoyed this video. Peace out.